Good day, ladies and gentlemen. We are going to look at Creditors Recon and age analysis. This is an additional activity for us to just focus on how can we combine age analysis with Creditors Recon in a test and in an exam. So now looking at the information, Peter's Cafe is situated in the north of Pretoria. So Peter sells basic food items to customers for cash only. However, he does buy stock for cash and on credit. So Peter received his statement from the account of Fresh Bakery for June 2021, and on closer inspection, he found discrepancies. Now, before we move forward, it is important to understand that Fresh Bakery Suppliers is our creditor. So from our perspective, it's a liability. But if I now look at Fresh Bakery, from their perspective, they are selling to us, which means that we are their debtor. And this is very important doing Creditors Recon to understand that concept. Why? Because Creditors Recon is always from their perspective. So looking at what is required, if I look at the first 6 questions, it all focuses on the Creditors Recon. Looking at the next set of questions, question 7, it focuses on the debtor's age analysis. I've highlighted question number 2 because it's important to understand the question. It says redraw the age analysis of Peter's Cafes after taking into account this payment, the payment of 9,000, and the errors mentioned above. Looking at the statement received and looking at the creditor's ledger, we always compare the closing balances. The statement shows, according to them, we owe 12,660, and according to us, we only owe 7,750. Then we look at transactions that appears after the statement was received. We look at correctness of transactions. Then we can also go and have a look at there is a transaction in the statement, it shows 500. In our books, in the ledger, it shows 5,000. You would notice that there's a credit note and an invoice on the statement, but nowhere is it in our books. So these are all things that we can identify before we even look at anything else. But now, how do I know who is correct, who made the mistake? So this is why our starting point is always the additional information. After reconciling the statement with the ledger account, the following differences were noted. So before we go through the transaction, just again make sure that you understand Peter's Cafe is us and we are buying from Fresh Bakery. Fresh Bakery is them and they are selling to us. So if I look at all the transactions, we can go through them individually, and on our question paper, we can already write where do we need to take it. We are going to look at all of these transactions in detail. So question 1.1.1. Why should the statement of account received agree with the account in the creditor's ledger? This is part of internal control procedure, whereby one process checks the other. Question number 2, provide reasons why the statement of account and the account in the ledger may differ. So they're only asking for one, but we're going to look at more than one reason. And now this question can be linked to, if you go to the information, if you go to everything that I've mentioned earlier, those are all possible reasons why it will differ. So the first one, there could be fraudulent transactions, activities that happened. Transactions occurred after the statement. Incorrect amount, entries or side. So this is done incorrectly. Transactions omitted. Omitted means it was left out. So we need to add it. Looking at the next two questions, ask us to do the creditor's ledger and to do the changes in the creditor's reconciliation statement. Please take note of the following. I can use similar information like in this additional activity, and I can ask it in a different format for you to present your answers. So this was required in this question to correct the creditor's ledger in the books and then to show the changes in the Creditors Recon. We are going to look at it in a table format. So we're going to change the format just a little bit. In the table format, on the left, we're going to have the creditor's ledger. On the right column, we're going to have the Creditors Recon. So starting with the Creditors Ledger and the Creditors Recon, we always start with the balances. What is the balance according to the statement received? That will go to the Creditors Recon. And what is the balance according to the Creditors Ledger? That will be shown in the Creditors Ledger. And you can see that there's a difference. So the first transaction says, Fresh Bakery had recorded a credit note on the 5th of June that was not for Peter's Cafe's account. This means that they've incorrectly credited our account with 270. If they've incorrectly credited our account and showed a return, it means that we actually owe them more money. So in the Creditors Recon, we are going to say plus 217. Transaction number 2. Peter returned bread delivered on the 14th as he never ordered the stock. So in our Creditors Ledger, you can see we don't have a record of stock that was delivered to us on the 14th. But on the statement, it says invoice number 123. When we return the stock, it means that we owe them less money. So how much do we owe them less? 980. So in the Creditors Recon, we're going to show it in brackets 980. Why in brackets? A reminder, in accounting, brackets means subtracting. If there's no brackets, then it means that it is a positive amount. You could also write a minus, a symbol, minus, before the amount. But always look at your instructions. What does it say? The bookkeeper of Peter's Cafe had incorrectly recorded the entries on the 28th and the 29th of June 2021. So we're first going to look at the transaction on the 28th. What happened? A debit note means goods were returned to our supplier, so the account should have been debited. But instead, the bookkeeper incorrectly credited the amount. And you can see on the balance that it had a positive effect on the balance. So now, how do we correct this? If you're not sure, you can always open up a T account. We've incorrectly credited the account with 140. So to correct this, we need to debit it. But now to debit it, we've only cancelled that 140. We still need to show the amount of 140 of the goods that were returned to our supplier. So very important, when I debit the account, what effect will it have on the balance? This will have a negative effect. So in our Creditors Ledger, we are going to show minus 280. Looking at day 29, On both the statement and the creditor's ledger, there's invoice number 198. But on the statement, it shows 500, and in our books, in the ledger, it shows 5,000. Remember, we made the mistakes, which means now we have overstated the amount with 4,500. You always take the difference. So overstated means that we owe them less money. And if you're not sure, again, you can use a T account as a tool. It was recorded as 5,000. It's supposed to be 500. So the difference of 4,500 appears on the debit side. If it appears on the debit side, it will have a negative effect. So in the creditor's ledger, we're going to say in brackets 4,500 because we need to subtract it. Looking at our last transaction, Peter's Cafe made a payment of 9,000 on 30 June, which Fresh Bakery has not recorded, which means that we owe them less money. So you can see in the creditor's ledger, it appears, but it does not appear on the statement. This is an example where the statement was received, and after the statement was received, transactions occurred. So in our Creditors Recon, we are going to show minus 9,000 because a payment was made. We owe them less money. After we've now completed all the transactions, we are going to total the Creditors Ledger and the Creditors Recon, and after we've done that, the totals should be exactly the same. According to the ledger, we owe 2,950, and according to the recon, we owe exactly the same, 2,950. Question number 5. We've now investigated and we've discovered that invoice number 123 on the 14th was for goods that one of the staff members had ordered for personal use. He took the business order book and ordered the bread from the supplier. So now the questions ask, how can we prevent this from happening in the future? Make sure that there's proper authorization for purchases. Make sure that you have control over your books. Have division of duties. And this means we cannot have one person that's ordering goods and the same person that is receiving the goods and the same person that is making the payments to the suppliers. There needs to be division of duties. Question number 6, what can Peter's Cafe do to employees who are guilty of conduct mentioned above? So what can we do to employees that's ordering goods unauthorized for their own personal use? We can have a disciplinary action. We can have a hearing with them. We can give them a warning and actually a final written warning. So if it happens again, they could be dismissed. And we need to make sure that those employees is not allowed to order any stock. Question 7, the debtor's age analysis on the statement received from Fresh Bakery. Reminder, earlier I said, question 7 focuses now on the age analysis. So if I look at the first question, it says, at the bottom of the statement, Fresh Bakery, it says 90 days plus. What does that mean? So this is an easy question. It's just knowing what does 90 days plus mean? What does 50 days plus? What does 60 days plus means? This indicates the outstanding balance. And if it specifically says 90 days plus, we say it's for more than 90 days outstanding. This is easy marks to get in a test or in an exam. Looking now at the age analysis that was received on the statement, it shows the outstanding balance, 12,660. Remember, this is now before we made any changes. And then I've got June, all the transactions that happened during June. So if I now put this on a table format, because now we're going to look at the workings of completing the age analysis. Current means we are busy currently in June. So my balance current is 4,570. 30 days, 1,470. 60 days, 2,580. And now be very careful. 90 days is not the 4,040. Remember, we now need to look at before all the transactions currently in June. What was the outstanding debt for 30, 60, and 90 days? So if I look at the balance brought forward on the first, it's 9,590. So to calculate that 90 days plus, we have to take that total, 9,590, and subtract it from the current 30 and 60 days. So our balance outstanding for 90 days plus was actually 5,540. This is now before we're looking at all the transactions that is currently happening during June. So looking at June, we've got the 270, the 980, and there was a payment of 9,000. These were all the corrections we made in the Creditors Recon. So please be careful. It says credit note, credit 270. Do not go and subtract it under the current column. We needed to make a correction, so we had to add the 270 because they've incorrectly credited our account. If we look at the 980, they're saying we bought on credit. Therefore, we owe them more money. They debited our account. If you remember back earlier, we never ordered those goods, so it was returned. This is why we have minus 980. Now, age analysis. The oldest debt is always paid off first. So on the 17th, there was a payment, 1,500. This now needs to go to the 90 days plus. Why? Because the oldest debt is paid off first. So if I look at what is left over on the transactions on that statement, we've got the 24th, the 28th, and the 29th. If I add and subtract, it gives us a total of 3,860. If you go now to the current column and you add and subtract, it gives you exactly the same total, 3,860. So this means to this point, we've done everything correctly because the balances are the same. So now we're focusing on that payment of 9,000. That payment of 9,000, the oldest debt is paid off first. So before I show anything, I'm first going to calculate 90 days. What is left? Remember, a payment of 1,500 was made and it was subtracted from the oldest debt, which means for 90 days plus, we left with the balance of 4,040. So now I can show this payment of 9,000. So to show the payment, I'm not going to put the 9,000, all of it in the 90 days. Why? Because there's only a balance of 4,040 left. So we are going to now subtract all of that, the 4,040, from the 60 days, 2,580, from the 30 days, 1,470, and then there's still an amount that's going to be paid off from the outstanding balance currently, and that is 910. If you take all of those amount in brackets, which I've just indicated, it should equal the 9,000, the payment that was made. So calculating now, the age analysis, if there's anything outstanding for 90, 60, 30, and currently, for 90 days, there's no outstanding balance, 60 days, nothing, 30 days, nothing, and currently, 2,950. Compare that total now with the creditors ledger you've done earlier, with the Creditors Recon you've done earlier. It should be exactly the same. If it's not, it means somewhere along the way you have made a mistake. Looking at the last question, do they have effective control over their debtors? In age analysis, we always compare the credit limit with the outstanding balances of our debtors, and we look at the credit terms and what is their debt outstanding after our credit terms, for example, 30 days. So if I now look at the credit limit is 10,000, yet the outstanding balance is 12,660. Remember, this is now on the statement before we've made any changes. If I look at that specifically, no. Why? Because they allowing us to buy on credit for more than our credit limit. The difference is 2,660. Looking at the credit terms, it's strictly 30 days, yet there's outstanding debt on the age analysis 90 days plus, 60 days plus, and 30 days plus. This means that no, they are allowing us to buy on credit even if we have outstanding debt for more than 30 days. And to be specific, 60 days and 90 days plus. So, no. Do they have effective control? No, they don't. If I'm now looking at the age analysis after we've made the corrections, and I ask you exactly the same question, do they have effective control over their debtors? Based on what we've done here, the answer would be yes. Why? Our credit limit is 10,000, but we only have an outstanding balance of 2,950. So based on this, they are not allowing us to buy on credit if we exceed our credit limit. Secondly, the credit terms is strictly 30 days. So if I now look at the new age analysis, there's nothing outstanding for more than 30, 60, and 90 days, which means that we are adhering to the credit terms. So based on this, they do have effective control over their debtors. This is just an added example. If I were to ask you, after we've made the corrections, based on the new age analysis, do they have effective control over their debtors? Thank you very much for taking the time to watch this video. I hope you have a better understanding of how Creditors Recon can be incorporated with age analysis. I want to leave you with a quote. Successful people do what unsuccessful people are not willing to do. Don't wish it were easier, wish you were better. Moving forward now, we are going to look at another type of recon, which is bank reconciliation. Remember all the videos to this point, we first focused on Creditors Recon, then we did Debtors Recon with age analysis. We've concluded that by looking at Creditors Recon combined with age analysis, and now the focus is going to be on bank reconciliation. I hope you have a wonderful day. Goodbye.